the banking system is failing because the banks don't have any money. So what happens is you put your money in the bank and you hope that you get your money back out of the bank. What a lot of you maybe don't know is that when you give that money to the bank, it is no longer your money. Most people don't understand this. When you open up a bank account, you fill out a whole packet of information. In that packet of information, you basically give away your money. It's no longer yours. You now become what's called an unsecured creditor of the bank. So what does that mean? Unsecured. That means they owe it to you, but it's not against any security. Like if the bank, gives you a loan against your house, but it's secured against the house. So if you don't pay the house loan, they take your house. It's secured against that asset. But when you give your money to the bank, it's unsecured. So we're doing that, and they don't have the money. Now, in the case of this, just to kind of frame it up real quick, go watch my YouTube video to get the full details. But basically, the Fed created all this money. So we had the pandemic. 2020 came. Between the Fed and the government, they printed about $11 trillion and sent that out into the ecosystem. Where does that money go? Well, of course, it goes to businesses and people and things like that, and they put it into the bank. The bank balances swelled to massive amounts they hadn't seen. As a matter of fact, in 2021, banks were telling people not to give them any more cash. We don't want your cash. We don't know what to do with it. Go spend it. Go give it to another bank. I mean, it was crazy. And so the balances swelled for SVB, Silicon Valley Bank. The balances swelled from 60 billion to almost 200, from 60 to 200 in about a year and a half. Now, what do they do with all that cash? Well, they invest it. It's your money. They invest it and they make money. Of course, they give you 0%. We're going to come back to that. That's an interesting piece. They give you zero, they're making money. But the problem is, with Silicon Valley, and other banks, Silvergate as well, they bought government bonds. When government bonds were very cheap, then the Fed goes on this crazy hiking path, raises rates really high, drives the value of those bonds down, and the banks lost a lot of money, similar to the free banking era. Then, when people went to go get their money out of the bank, Silvergate Bank had over $40 billion worth of redemptions or withdrawals in a day, and they didn't have the money. It was gone. They risked it into treasuries, they risked it into mortgage-backed securities, and they lost money, and they didn't have the money to give to the people. When they started selling the treasuries to get the money, they lost almost $2 billion. They tried to go raise $2 billion to pay these people. No one wanted to give it to them. Surprise, surprise. And they went out. Now, it's a much deeper, more involved story. Like I said, go to my main YouTube channel, Mark Moss, to watch that whole thing. All right. But the thing is that I want to highlight is that this isn't just Silvergate or Silicon Valley Bank or Signature Bank. This is all the banks. This is the entire banking system that's breaking apart like this. It's doomed. They don't have your money. Now, in order to try to save this system, the Fed pulled out some more magic tricks, and they basically said, hey, all these government bonds that you have that you lost money on, we'll just make you whole. Okay, and the Fed also said we're gonna guarantee all deposits. So you have money in the bank that's FDIC insured, up to $250,000. But now the Fed said, hey, we're just gonna guarantee all of it. Now, why? Silicon Valley Bank is a bank in Silicon Valley. Silicon Valley is big political donors, specifically to the Democrat Party. California Governor Gavin Newsom rallied really hard to get a bailout for Silicon Valley Bank. Turns out all his businesses use that bank. Surprise, surprise. Turns out about 98% of all the deposits at Silicon Valley Bank were not insured because they were over the $250,000 limit. So what we basically had was a small, very small community bank for the very rich. That's what we had. The very rich and very connected, we'll say, right? So that's basically what happened. And so they got the government, Gavin Newsom got the government's ear, they bailed out the bank, and they made all those depositors whole. Now, it wasn't necessary to do this. They had losses. They wouldn't have been able to pay everybody back 100%, but they could have paid back everybody mostly 90%. Maybe some of these depositors would have taken a 10% haircut. These are the billionaires. I think they could afford a 10% haircut. But more importantly, it would protect the system, because that 10% haircut would be like that slap on the wrist when you touch a hot stove and you don't touch it again. And it would teach those people that they should take personal responsibility and not put all their money into the system that's not protected. It would also teach the bank that they should use proper risk management. So SVB Bank didn't do that. They didn't use any proper risk management. They were way too risky. As a matter of fact, they had about 78% of their investments into mortgage-backed securities. For comparison's sake, that normal banks are about 30%. They were way too risky, and they didn't employ even the most basic of risk management strategies, such as hedges to protect themselves against bond yields moving against them. And so, again, no lesson is learned. Capitalism is shortcutted, and so the government saves the day. But one thing that's important here is that in the fog of war, there are casualties sometimes that you might be called friendly fire, something like that. And in this case, it looks like what the government is trying to do, or I should say the banking system, is they're trying to take out the exits. They don't want you to get out of the system, because if you get out of the system collapses. They need your money in the bank. As we found out, Silicon Valley Bank, people tried to pull their money out of the bank, the banking system collapsed. If people go pull their money out of the banking system will collapse. As a matter of fact, if just a few percentage of the people were to pull their money out of the banks, the banking system would collapse. So they need your money in the bank. They don't want it coming out. The whole system collapses, and we can see this. So I recently had on Caitlin Long on my main YouTube channel. Amazing interview. It was also on the podcast, so just search Mark Moss Show, Caitlin Long. You can find that interview. With hundreds of thousands of views on this video and the podcast downloads. Go check that out. And she was trying to form a bank called Custodia Bank in Wyoming. And Custodia Bank was going to be a custodian, which meant they were going to hold on to your cash for you. They were going to be a 100% full reserve, meaning you give them money, they keep it. None of the other banks do that. When you give your money to the banks, they lend it out. They don't have your money. But her bank wanted to have a novel idea, such as, we're going to keep all your cash in the bank, and we're going to charge you just to service your cash. And I think a lot of people would do that. And apparently the Fed thinks a lot of people would want that as well. So the Fed denied their banking charter. They said, nope, you can't have that. Why? Why would the Fed do that? Well, it turns out it wasn't the only one. There was another bank called Narrow Bank, same thing. So the Fed has to approve any bank charter, and Narrow Bank, Custodia Bank, they got denied for trying to be safe, for trying to hold on to your cash, which is what they're supposed to do, and the Fed denied them. Why would the Fed deny them? Well, the Fed denied them because they know that that's what people would want. And so everyone would take all their money out of these risky banks that don't hold your money, and they would move it to these other banks, and it would completely wipe out the banking system. So the Fed said, no, you don't have the right to keep yourself safe. That's how fragile this system is. But it gets worse. There's so much more. Now you won't even believe what they're trying to blame this on and what they're trying to do next. It's probably one of the biggest battlegrounds that we have in our life.